Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, April 22nd, 2020. We again find ourselves in the final hour of the trading day. In my opinion, at least for me, the best time to make the majority of my buying and selling decisions is right at the end of the day, just in the last few minutes. I say this because during the regular day, you have the day traders and the algorithms. They are the ones controlling the prices. At the end of the day, you have the large financial institutions coming in. They are dealing with very smart people, the best technology, the best information. They're dealing with the most money. And at the end of the day is when they come in, make their move, and they start taking the control of the pricing away from the day traders and the algorithms. So I like to piggyback off of what they're doing at the end of the day compared to what's happening during the normal part of the day when the algorithms and day traders are involved. So that is why I make the majority of my buying and selling decisions right at the end of the day. So anyway, thank you all for coming today. I appreciate it. It's always nice to see everybody. I always look forward to it. I think we have a really good group here. We have people in the chat with really good comments and suggestions and observations and poems. And so I'm really grateful that we have this little trading community here. So thank you all for coming. Really, really appreciate it and really look forward to seeing everyone every day. All right. Well, we are having a big day. The Dow Jones is up 509 points. It's up 2.21. The NASDAQ is up 248 points, up 3%. And the S&P is up 68 points, up 2.5%. So it looks like the clear winner today is the NASDAQ. In second place, S&P. In third place is the Dow Jones Industrial. So let's take a look over here, see how people are doing. Hey, Dan is here. Hello, salutations to you. Good seeing you, Dan. Hello, Kevin Frost. Hello to you. Thank you for coming. Nice seeing you. Scatty13 is here. Hey, Scatty, how you doing? Good to see you. Appreciate you being here. Zach. Hello, Zach. Always good to see Zach. Hope you're having a good day. Mohammed is here. Hey, Mohammed. Good to see you. Haven't seen you for a bit. Thank you for coming back. All right. Well, interesting day today. Big down day yesterday. Made it right back today. So interesting time. So nice green day today. I'm always grateful for that. That's for sure. Contrarian's here. Congrats on your overnight SPY trade. Thank you very much. I'll tell you, with that particular trade, obviously I want it to go up, but I don't get too excited about it. You have up days, you have down days, basically just like any other trade. You just hope in the long run that you're going to have more winners than losers. Zach says, speaking of poems, can we give Frank's props again for getting in and out of Netflix last night with such a profit? All it did after he sold was plummet. 100%. That is correct. Frank bought Netflix. Well, let's take a look. I can't remember exactly where he sold it. I kind of want to say 480 or something. Kind of up here. I think 480. And I think it was 9% or 7%, something like that. But let's take a look. He bought it at the close or near the close and held through earnings. It gapped up all the way up to here, guys. And he got out immediately somewhere around 480. And then he got out, and it is just crumbled since then, down 2.5%. So 100%, Zach. We should definitely. Hey, there he is. Frank, we were just talking about you, and what a great trade you took on Netflix, getting out on that gap, and then it's gone down ever since. That was one of the best trades I've seen in a long time. So congrats. Miko is here. Hey, how you doing? Miko25, good afternoon. Good afternoon to you, sir. Looking forward to our call tomorrow night. And Marco is here. Hey, Marco, how you doing, my friend? How are things in Slovenia? Any trades you have for us lately? You always hear about my trades, which get boring, but I like to see what everyone else is doing. Frank says, thank you. Sold it at 489. Oh, even higher. I thought it was 480 stuck in my head, but you would know better than I would for sure. Right up here, close to 490. That was an absolute fantastic winner. Again, I do want to put in a disclaimer. It's not as easy as it looks buying stocks going into earnings. I obviously am really glad that it went up for Frank, but I don't want people to look at that and think, oh, that's all you have to do is buy earnings and it's going to go up, because it doesn't always work that way, right? But I'm glad it did work this way. 480.17. That's what 480 stuck in my head. Bob is here. Hey, Bob. Good to see you. Always nice to see Bob. So listen, here's the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, what trading strategy I was using when I bought them, and how I'm going to manage them moving forward. After that, some of you have shared some of your trades with us. Not a lot. I think we only have TLT, although Frank shared the trade yesterday with Netflix, but that one's off the board now. So we do have one. We do have one trade up here from Bing He. After that, we're going to spend a few minutes on trader psychology. Very important part of trading. In my opinion, the most important part. So I like to discuss it with you each day. You have to learn how to trade. You have to learn how to identify support, resistance levels, all these kind of things, indicators like MACD and RSI, right? Moving averages, but you learn these things so that you can put together a plan. And after you've put together a plan, then you have to follow it. And following that plan is much more difficult than making the plan, from a lot of traders that I know and my own experience. So, I like to talk about trader psychology, trading words of wisdoms, and hopefully by hearing this every day, you'll kind of internalize it and you will start to follow your plan. And I mention this every time, but the most important aspect of following your plan, in my opinion, is position sizing correctly. Position sizing, the wrong position size, is generally what makes people get out too soon, either to the upside or the downside. So we're going to talk about that. Then we're going to come back. We're going to go down through my watch list. We're going to go down through each stock one by one. I do have 3 requirements before I enter any trade. First requirement is I have to have a good first requirement is I have to have a combination or confluence of indicators such as MACD, RSI, ATR channels, moving averages lining up, because I look at each one of these indicators as a potential group of buyers. And in a bigger sense, you will have the best chance to have a profitable trade if you are in the company of as many other groups of buyers as possible. The more, the better. It makes sense, right? If you have a lot of other buyers around you, drive the price up. If you're the only buyer when everyone else is a seller, that's going to be a tough putt to make that price go up. So it's just the opposite. So as many other people buying is good, helps your chances. And looking for a confluence or a combination of indicators is how I identify that there's different groups of buyers coming in. Step 2, have to make sure you have a good risk to reward. I say this each day, but listen, it's important. You can have a good setup. You can have a good confluence of indicators, but if it happens at a level, and this is subjective, what these levels are, but if it happens at a level where maybe it might be a little overbought or there's quite a lot of resistance above, and it gives you less reward, even though you have a good setup compared to what your risk is, then I just go ahead and pass on the trades. And, there's been a couple trades lately that I did pass on that went up. And I was like, dang, right? My rules got in my way. But then there's also been a couple trades that I did not take, and I'm glad I didn't, because identified the risk to reward. It didn't make sense. So sometimes it works for you, sometimes it works against you. It can be extremely frustrating, but all you can do is have your rules, follow your rules, and just make sure, depending on what parameters you're using, does it have a good risk to reward? And then number 3, just make sure you don't have too many highly correlated positions. You don't want to have 3 or 4 or 5 tech stocks, because if they go up, you're doing really great. But if they go down, then you're getting hit 2, 3, 4, 5 times as much to the downside, because stocks tend to follow each other. On up days, they tend to go up, and on down days they tend to go down. So that's why it's important to have diversification between the type of stocks that you own in your portfolio, and it's even good to get outside of stocks like bonds or gold or oil or silver, right? Something outside so it's even less correlated. And then lastly, account heat is very important. I never put 100% of my capital at work. I always have a maximum, and my maximum is 60%. And it doesn't mean I have to have 60% at risk at all times. It's just that that's what my maximum is. So those are the 3 rules. I'm going to go down through the watch list. If something looks good on first review, I'll go ahead, click it off, get some candidates. At the end of the day, I'll try to whittle those candidates down to the very best entry of the day based upon the 3 rules that I just told you. Confluence of indicators, and I might add confluence of indicators on multiple time frames is better than a confluence of indicators on just one time frame. Risk to reward, then keeping in mind correlation and account heat. So if I find something good at the end of the day, I'll go ahead and take that trade. So then after the market closes, if anybody has any questions for me, please let me know. Happy to answer them, give you clarification on anything I discussed, or if you just have any just normal kind of questions outside of trading, even if I haven't discussed it, go ahead, please let me know. I'm happy to answer it. If there are any stocks that you would like me to take a look at before the market closes, if you'd like to get my opinion on those, happy to do so. Just please go ahead and put your symbol in the chat, but make sure you put a star by it or something so that I know it's time sensitive, and I'll do my very best to get to it before the market closes. So, all right, well, that is the plan for today. And if you could hold tight, I'm going to run that U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, Frank has a poem for us before we get started. Let me take a look at this. Think twice before you roll the dice and be prepared to sacrifice. A win, real nice, but you can be sure it won't suffice. Speculate if you must, and you'll learn why rules that we can exist that we can trust. Okay, let me take another crack at that. Think twice before you roll the dice and be prepared to sacrifice. A win's real nice, but you can be sure it won't suffice. Speculate if you must, and you'll learn why rules exist that we can trust. Man, it's so good. I can't even stand it. It's so good and so on point and relevant and everything else. Thank you, Frank. Wow. I mean, what a talent. What a talent, Frank. Man, thank you. PC? I hope I'm pronouncing that right. Hey guys, any good big earnings trades today? You know, I do not trade off of earnings, so it's not something I look at. I'm sure there are earnings today. If anybody has any thoughts on that, let PC know. And when we go through the charts, we'll see. But just want to make it clear that I do not buy before earnings. Brian is here. Hey Brian, good to see you, my friend. Always nice to have Brian here. Mount Doji, hey buddy, what is going on, my friend? Hope you're doing well. Good to see you. David is here. Hey Dave. Hi Greg and all. David, I tried the Netflix trade too, but the after hours only started 5 minutes after closing in Schwab. I had a smaller gain because it dropped super fast. Okay, well good. So David And Frank had good trades on that. Congrats. Very nice. Very nice. All right. Well, let's get started here. See what we have. Adobe. I did buy Adobe back here on the 17th of April. I bought it when the 10 EMA crossed over the 50 EMA. This has good back tested results from using this approach. So you enter when the 10 crosses over the 50 EMA. You hold it until the price, if you're trading it mechanically, you hold it until the 10 crosses back under the 50. That's the mechanical way to trade. I traded a little bit differently. You know, if the 10 crosses back under the 50, I go ahead and sell half, both the 10 and 50, I go ahead and sell half my position. If then the 10 crosses back under the 50, if the 10 actually crosses under the 50, I will sell the other half. So if the price crosses below both the 10 and the 50, I sell half. If the 10 crosses below the 50, I sell the other half. That's to the downside. Of course, I always have my emergency stop in place as well. Because if it gets down to my emergency stop, you know, I've decided how much I'm going to lose on any one trade. And I use the two ATR channels, the two ATR reading to designate. So, you know, for example, if I was willing to lose $1,000 on this trade, I would take $1,000. I would divide it by the value of the two ATR, which is 30.91, and it would tell me to buy 32 shares. Now that's just an emergency stop. That's in the worst possible case. Most likely and very often, I don't hit my emergency stop very often, you know, if you look at it through each year. But I want to have that in place just in case something really goes down. I want to have a defined risk on the trade. Most of the time I will get out of with my end of day trade before it hits my emergency stop. So now that's to the downside, and I always concentrate on the downside first because really we have to look at risk. To the upside, if it moves up, I will just continue to hold it. I will scale out as it moves up. If it rejects the 70 RSI, that will be my target to go ahead and get out. If it closes above the 70, I will hold it until it closes back below 70, because it's difficult. About 90% of the time, stocks will find resistance to the 70 and go back down. Alternatively, you know, if we have a big reversal bar, like it gaps up and it reverses back down, something like that, that will also be a reason for me to kind of circumvent my regular exits, which are my stop losses to the downside or rejecting the 70 RSI. If I see a big bar, you know, much larger than 1 ATR, opens higher, close lower, that's what I consider a volatility bar, and that I would get out of that. So anyway, yesterday, the price did get down. It almost closed below the 10 and the 50, but it did not. So I kept the whole position, and it's up 2.63% today. And I did hit one profit target. So grateful for that. Okay. Frank says, reread the poem, Pacey. Hey, Steve Burns. Good to see you, my friend. Always nice to have Steve here. Always an honor and a privilege to have somebody with Steve wisdom and his experience and all the great books he's written on trading and courses that he has over at New Trader U. Thank you, Steve, for coming by. Steve says, short sellers burnt again today. Yeah. If you were short, you did not want to be short today because we have had a big day up. Good to see you though, Steve. Thank you. M.A. Casper. Let's see if I actually have these in my... Okay, I do have that one. Casper Sleep. Yeah, you know, definitely in an uptrend here, but it's up at the second ATR channel. And as a lot of my students know, and a lot that you know, whenever it's above the second ATR channel, I'm just not going to take the trade no matter what. The reason why is we have the third ATR channel up here. 92% of prices fail here. And so to me, it doesn't, at the very, very best, this might give a 1-to-1 risk to reward, which just is not enough for me. GPS. Mm, yeah, I don't see anything here on gap. Although it could have it could have a V2 tomorrow. Here's day one. Here's day two. Day two washes out day one. If we closed above day one's close, that might be interesting. What I'd really like to see is this come back down to the -1 ATR channel and then reject it with the V1 or a V2. That would be ideal, but I don't see anything on gap. Tesla's just too high for me to buy up here. Doesn't mean it can't go up. Looks like we have earnings next week, but we're right at the third ATR channel. 92% of prices fail here, so doesn't mean the other 8% can't go on a huge run. It can, but the way I trade with the parameters and the filters that I have, I just couldn't buy something here. Hey, Kamal, good to see you, my friend. Hope you're having a good day. Thanks for coming. Frank says, it was a frenetic day and I missed the trade I wanted to make, which was CMG. Oh, Chipotle. Oh yeah, they had earnings. They had earnings yesterday. Boy, up big, big, big. And you missed that one. Well, at least you got the Netflix one. Zach, how do you feel about Snap? I discovered your channel from Famous Dave. That was an excellent episode. Oh, thank you, Zach. I appreciate that. Now we have two Zachs in here. So let's see. Snap. Yeah, I mean, look, this is breaking out. Is this breaking out to all-time highs? No, not all-time highs, but definitely huge breakout. My gosh, it's up 33.92%. This is just not my kind of trade. Look, this trade could go for a long time, but we're up here at the 5th ATR channel. Very difficult to get above the 6th ATR channel. So for me, I personally wouldn't take this trade. If it were me, I would wait and see if we could come back down, test that 200-day if you really wanted to buy it, and that way you have a small loss if you're wrong if it closes under the 200-day. But yeah, that's a monster day. We look over here on the weekly, it's right above the one, right at the 1 ATR channel. Good chance it would stall there. So if somebody forced me to buy this right now and just said you have to buy Snapchat, it's okay, and I would probably go ahead and just use a stop below of the gap up day. That would have to be my stop right there. But all in all, I wouldn't be interested in taking this trade. Doesn't mean it can't go up any higher though. Okay, so we looked at Adobe. Now let's take a look at Apple. Apple, I do have a position. I have a call. I have a long-term call on Apple June 18th, I believe, or June 16th of 2021. So it's a long-term call. I did buy it back here during this week in the big down week. My trade plan for this, they're $250 calls. Right now they're $276, so they're in the money nicely. But even when I have calls, I do have to have some kind of trade plan, whether I'm wrong or I'm right. To the downside, if we closed back below on the weekly, below the halfway of this nice V1 bar here, I would get out and just have to take a partial loss. If we go up here to the 1 ATR channel and it rejects the 1 ATR channel, then I would go ahead and just lock in my profits there. If it closed above and kept going, I would keep it. So anyway, this trade has worked out nicely as well. And then we were talking about the overnight SPY trade earlier. Let's take a look here. Okay, and so listen, if I know I talk about this every day. I know you guys get tired of it, but in case we do have some new viewers, I do want to go over why I do buy the SPY every single day at the close and I sell it first thing the next morning. So this is a back-tested study from Liz Ann Saunders at Bespoke Invest. This is a study they did every day since 1993. Two approaches with this backtest. First approach was buying the SPY at the open, holding it through the day, selling it at the close. If you use this approach every day since 1993, you'd have lost a negative 13.9% return for all your troubles. However, if you do the opposite, which is what I do, buy the SPY at the close, hold it overnight, take the risk overnight, sell it the first thing the next morning, you'd have actually returned 634.2%. So a lot better than a negative 13.9. Past performance is no guarantee of future results. That is true for any trading program. The blue line is the buy in the afternoon, hold overnight, sell in the morning. The orange line is the buy in the morning, hold through the day, sell at the close. You can see there's a huge difference between the blue line and the orange line, and really comes down to taking the overnight risk. Now, there are definitely a lot of ups and downs with this approach. This is a long-term approach. I'm looking at how this does 2, 3, 5, 8 years out, not really what it's done in the last week. 2019 was a fantastic approach. 2020 has not been a fantastic approach, but not as bad as it's been. I've had a pretty good comeback for sure. But there are drawdowns, so it's important to position size conservatively so that you can withstand taking the drawdown. So that being said, I did buy SPY yesterday at the close. On the week close, I bought it at 273.04, and I sold it 273.04, and is it 04? Yeah, 04. And I sold it up here at 278.38. So really nice overnight trade on SPY. I do want to mention, I was talking about this having really bad results. Well, when we had the apocalypse back over here, it was brutal. It was brutal. And I actually did even skip one day because it was that brutal. But that's the only day I've skipped in over a year and a half, whatever, how long it's been since I've been using this approach. But, I was like, look, over the long term, this does have a good back-tested record. Position size correctly. I cut my position size when we closed under the 200-day moving average and the volatility started to increase. You can see how wide these ATR channels is. That means volatility is increasing. Now they're starting to narrow. That means volatility is decreasing. So anyway, yeah, nice overnight trade there, and I will hold that. I sold that this morning at 278.38, and I will buy it again today, and I will hold it overnight, and I will sell it first thing the next morning. All right, lastly, we have Bing He. This is the only trade on. We had a bunch of trades on yesterday, but now we only have one. Bing He did buy TLT. I think he bought this when it closed over the 1 ATR channel. I'm not 100% sure, but he did buy it at 168.80. Bridge went down, went up, was up nicely yesterday. Still in the money here at 168.80. So I don't know if Bing He is here with us today, but if he is, he's got a profitable trade going on so far. So congratulations, Bing He. All right. What did the trade return in 2019? Well, I didn't use it the whole year. If I remember correctly, like on an annualized basis, it was somewhere between 12 and 13%. Frank says, I call the Saunders trade Groundhog Day after the Bill Murray movie. Oh, that was a really good. Oh, the Saunders trade. Yeah. It gets repetitive, doesn't it? It gets repetitive talking about it too, Frank. Yep, the Liz Ann Saunders trade. Good movie, though. Kevin Frost says, how early do you sell in the morning? Right at the open? Yes, Kevin, right at the open. I don't sell it in the pre-market. I buy it, I buy it at the end of the day. I just put a market on close order in so I don't have to worry about it. It buys it. And then literally after the market's closed, I just go in and say, hey, sell it tomorrow morning at the market. It's pretty easy. Bing He, hey, buddy, I was just talking about you. Good to see you, my friend. We were just talking about your TLT trade. Down a little bit today, but still up since you bought it. So congratulations. All right, so listen, this is the time of the day that I do like to spend a few minutes and talk about trading psychology, why it's so important, some good trading words of wisdom from experienced traders that share their wisdom with us. And, it's important to be able to create a plan, but you have to follow the plan. And that's where trader psychology gets in there. So before we go through my watch list and look and see if I have a setup for the end of the day, let's talk about this. There's a lot of good channels on Twitter, a lot of good channels on Facebook, and one of my favorite ones is from Julian Komar at blog Julian Komar on Twitter. So if you haven't subscribed to him, I would suggest it. He puts out really good information. Top 10 problems of the average trader. Feels like the David Letterman show. Top 10 problems of the average trader. Number 1. Let's see if any of these kind of strike a nerve with you, and see if there's anything here that you have an issue with. Hopefully not, but maybe all 10. We'll see. 1, overtrading. Yeah, not good, right? Let's be selective. Let's let our trades come to us. Let's wait for a trade that, historically has an edge. Doesn't mean it's going to always win, but let's be selective and just not trade for the excitement. Let's just wait for a good setup. Take it, win or lose. That's all you can do, but let's be patient. Let the trade come to you. No, number 2, no stop loss. Well, yeah, this isn't good. That's like driving a car with no brakes, right? You always have to have a maximum that you're willing to lose on every trade and position size, so that, if it's outside of noise and it proves that you are wrong, you need to get out. The worst thing you can do is getting in a losing trade, have an idea about something, have it go against you, then it's too low, then you can't sell it. And trust me, you would have been happy to get out with that first stop loss. Number 3, predicting movements. This is a tough one. Some people don't even think about predicting movement, but a lot of other people do think about predicting movement. And basically, you have to have a theory, or you're guessing about which way something's going to go. That's why I'm a price action trader. I just trade what the price is telling me. The market is right. Doesn't mean the market's always right. I am not always right. So like I said, I like to just base my trades off of price action and what's happening, and without predicting movements. Too big of position sizes. Okay, well, we have all probably succumbed to this, right? Oh, this is a good trade. I think I'll bump up my position size here a little bit. Have a standard position size based upon whether it's your 10% or whether, like you're using a 2 ATR to help you find your position size. But too big of position sizes is a biggie. It's a killer. Trading for excitement. We do not want to trade for excitement. We want to trade to make money, but unfortunately, a lot of people just trade for excitement. No plan or strategy. Well, you need a plan or a strategy for sure, right? I mean, nothing's going to work. You might have some winning trades without a plan or a strategy, but in order to do this over the long run, you really have to have some kind of plan or strategy in place that has, some kind of good back-tested results. Or at the very least, buy very close to your stop. Keep your position as long as it's working your way. If not, get out with a small loss. Having small losses and big wins is a bit of a trading strategy as well. Wrong expectation. Well, wrong expectation kind of goes back to predicting movements, but yes, Number 8, fear of missing out. That's a huge one. It's a huge one. People see the market going up. Like the other day, I had some trades that I didn't take because my filters told me I could not. And then the market just left without me. I'm like, oh man, you know what I mean? And then, it runs through my head. I'm like, should I get back in? No, because it's not part of my trading plan. See number 6, right? But fear of missing out is one of the worst possible ones. Really, it really is. Dr. Elder says sell when people are manic and buy when people are depressive. And if things are going up and up and up, generally that's when fear of missing out kicks in. No patience. Well, yeah, you have to have patience, kind of back here to number 1, over trading. Have patience, wait for your trade to set up. Identify, hey, I'm going to buy this when this gets here, if it gets there. It might be long ways away, but just be patient, wait for your signal to trigger, and don't try to front run it. And number 10, not doing enough homework. So, you know, this statement here could mean a lot of things depending on how you trade, whether it's fundamentally or technically. Um, you know, the homework I do is basically I go through my charts every day. I look at them on multiple time frames, look for that confluence of indicators. I also do a lot of just simulation trading, where I go one day to the next day to the next day on my charts and just simulate trading, and that's homework for me. So anyway, I hope this helps. If any of these resonate with you, or if multiple ones resonate with you, you know, let's work on that. But thank you, Julian. Appreciate that. Okay. Glenn, good to see you. IWM is still weak compared to QQQ. That's right. So Glenn has shorted IWM and he has bought the Qs, and he is totally correct. He lost a little bit on IWM because it's up today, but he made more than he lost by buying the Q. So congratulations. Steve says, looks like I will be buying QLD and Nike today with the new 10-50 day crossover. Okay, let's take a look. All right. So here's the crossover trade for Steve. We have the 10 crossing. Oh, am I looking at the wrong one? Oh, maybe this is the 1050 SMA. Let's see, I've got it over here somewhere. Huh. Oh, yeah, you're right. Yeah. The 10 crossing over the 50. Yeah. Okay, so look, here is the situation for me, right? So it's above the second ATR channel. So when I have a crossover that happens above the second ATR channel, I just can't take it, right? Based upon my rules. So Steve has different rules, and so he will take it today. So okay, good luck on that trade. Let's look at Nike. Boy, Nike's having a big day today as well, isn't it? Let's take a look at this here. 49.69. Yeah, let's mark that one on Nike. MA says, you liked Twitter yesterday a lot. You know, I looked at Twitter. What I was looking for on Twitter was a possible V2 today. Well, we did have a V2. I was waiting. It was above the 1 ATR channel. I was waiting for it to come back into the value, the sideways motion, then the washout, which we had. Today we do have a V2. We do, MA. And we have a 520 EMA crossover as well, which is good, but it doesn't backtest here. Let me show you real quick. I'm using this by permission from ETF Replay. Here's the 520 EMA crossover. You can see the return is negative using this approach. So that being said, I am not going to buy it. And the V2, yeah, but it's above the 1 ATR channel. So when it's this far above the 1 ATR channel, unfortunately I have to pay. I have to just let the trade pass. And that's just me being patient and following my rules. Doesn't matter, it doesn't mean it can't go up. So all right. Contrarian. It's the one I just showed you, etfreplay.com is what I use for the back testing. And here it is right here, ETF Replay. And I am using that with permission, YouTube. Okay. Glenn says PayPal looks like it's going to fill the gap at 118. Yeah, right about there. Definitely could. It definitely could. And PayPal's earnings this afternoon? Or did they come out this morning? It's up big, ahead of earnings for sure. Now, remember what happened to Netflix after earnings as well. All right, so look, let me quickly go down through the watch list here. We'll take a look. See if anything looks interesting. We have about 20 minutes to do this. All right. Apple, okay, up 3% today. Still under the 520 crossover that happened back here. Still over the 1050 EMA that happened here. I just don't see any particular trade that I want to take on Apple. Adobe I have up 2.93% here. I bought that with the 1050 EMA crossover. Yesterday was pretty scary, almost got me out of half, but I stuck with the 1050 crossover and I took it, or I kept it, and so I'm glad that I did hit one profit target today. Amazon has earnings tomorrow. That should be very, very interesting. But I don't see anything here. I'd need a pullback into the value zone. I need a reversion to the mean for me to get interested. Boeing, not doing much. Not doing much here. Berkshire Hathaway up today. Did come back into the value zone. Better than buying up here, right? But I don't see a trade here either. Beyond Meat. Just too high. It's above the third ATR channel. Very strong to close above the third ATR channel, but a pullback into value is what I would need. Caterpillar was way above the value zone, back in the value zone, sideways movement, but you know, the setup's starting to get there, but I need the trigger, which would be a V1 or a V2. Carnival, man, this thing is moving sideways, 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 and you know, it's consolidating, winding up like a watch, like a tight watch. And this will probably move strongly one way or the other. But right now there's just price discovery going on here. I don't know which way this is going to go. Of course, I never know which way anything is going to go. We are forming a potential for a V2 tomorrow. Here's day one. Day two washes out day one, but no entry yet. But I have a feeling that thing's going to move. The Dow, just too extended up here for me. We pulled back into the value zone yesterday, but nothing here yet. Walt Disney has just been really choppy here, back in the value zone, but need a V1 or a V2 to get interested. Etsy has just been a monster. My gosh, look at this thing. It's unbelievable, right? But again, I need a pullback into the value zone, at least to the 200-day to give myself a good risk to reward. Facebook's just cranking today. Poked its head into the value zone for one day and then blasted off, but just too high. It's up here at above the second ATR channel. Gold, really strong today, man. Gold has been strong, strong, strong. I did buy gold back here when I had the 520 crossover. That's good back tested. Went sideways, went down, had to get out of half of my position, but luckily I kept the other half for up to here. I got out right here at the day that was the top. Google, I did take the 520 crossover here on Google, moved up nicely, sold half of my position here when I rejected the 200, and then I sold half my position a couple days ago when it lost the 200 and the 50 I was really glad that I got out after yesterday, but now it's back up, not too much further than when I sold it. So I don't see anything on Google. Goldman Sachs, nothing really here. Like to see it pull back into the value zone. I want to buy at value or under value. I don't want to buy up here. I did have a nice trade on Goldman Sachs back here when I had a higher low V1 bullish engulfing bar and rode that right up to about there. That was about a 10% or so. That was a good trade. Went further without me, but basically it's just moved sideways since then. Home Depot, it's had a nice run, but it's over the 1 ATR channel. Want to see it come back into the value zone before I get interested. IBB, Steve had a nice trade on the 530 IBB. I think he got out here. And it's just kind of moved sideways since then. Looking for a pullback into value, a little bit of a reset. Intel, nice V2 today, day 1, day 2, day 3, but it's triggering above the 1 ATR channel. So, you know, my rules at least tell me I can't buy there. And it looks like earnings are coming up anyway. IWM, we talked about that, up today. Nothing there. J&J has just been extremely strong, just keeps going up every single day. Just too extended at the 3rd ATR channel. CarMax. Don't see anything on CarMax. Coca-Cola. Well, here we are. We were above the 1 ATR channel. We came back into the value zone, which is good. We are moving sideways. So this setup is starting to set up here, but I always need a trigger first. And generally my triggers on return to generally my triggers on a V1, on a return to value V1, V2 is return to value trade. The trigger is a V1 or a V2. So nothing quite there yet. Lockheed Martin poked its head above the 200-day moving average, just a little too high for me to buy here. MasterCard, big day today, up almost 5%. It's a V2. Here's day 1, day 2. Day 2 washes out day 1. Day 3 closes above day 1. We had a lower high, but we did wash out the lower low. Unfortunately, I can't take this. It has a gap. I can't take a V1 or a V2 when I have a gap. Gaps like to get filled. Doesn't mean it can't continue to go up. It very well may, but I have to stick with my rules. Mickey D's broke out there, just too high for me. Merck back in the value zone. Be looking to buy it back in the value zone, but I need a V1 or V2 trigger. Microsoft, big down day yesterday. Up day today, but not so much volume, so nothing on Microsoft. Netflix, Frank is the master, sold it. It's so up high. He sold it so high up here, I can't even get my cursor up to where he did it. That's high. And then it just came crashing down. So I would be looking to buy Netflix some here in the value zone. Nike, we just talked about that. Looks like has the 520 EMA 1020 EMA crossover, so I'm going to consider that one. Philip Morris, well, we are back in the value zone. We are starting to move sideways. That's what I like. So I'm looking for a V1 or a V2 here in the next couple days. That would be great on Philip Morris. PayPal, big day up there. Q's. Well, big down day yesterday, reversal today on lower volume. I don't see anything here. Looking for a 520 cross under and then back over. That would be a possibility. Silver, back in the value zone. I'd like to see this 5 EMA cross under the 20 and then back over. S&P, had the nice S&P trade there overnight. I'll be buying that again today. Teladoc had a big reversal bar yesterday, bearish engulfing bar, V1 to the downside, rejection of the previous high. Is rallying today, but nothing there for me. TLT, being he has that, he's slightly positive. Tesla, we talked about that, just too high. Twitter, big strong day, V2 and 520 crossover, but it doesn't backtest well. It's too high for me to buy there. United Continental. Now, if I could get a V2 tomorrow, this would look outstanding. This is a high, this would be a higher low V1, V2. We closed below the 1 ATR channel. We went back up into the value zone. We've sold off today, washed out yesterday's low. If I can get tomorrow to close above yesterday's close, that would be a perfect higher low V2 setup. So nothing there today, but possibly tomorrow. UNG, natural gas, been very, very strong, but I don't see anything there. United Healthcare, need to pull back into the value zone. USO is oil. Man, US oil. It's interesting because USO is down today and oil is up so much today. Interesting. But I mean, my gosh, $2.51. This is incredible. VIX down a bit today, had a big move up yesterday. Verizon just range bound. WBA. Let's take a look at the weekly here. Moving sidewards. Walmart just a little high, need a pullback. XLE is up today with oil. Financials back into the value zone, up slightly today, but no trigger. Real estate needed to come back in the value zone. Utilities, no. Healthcare need to pull back to the value zone, at least to the 200. And Zoom, nothing on Zoom. So the possibilities today, well, here's QLD. This is the double leverage. Remember, this is double leverage now, folks. So, you know, there's twice as much to gain and twice as much to lose. It does have a 520 crossover, which is good. It's up 6.97% today because it's double leverage, but it is above the second ATR channel. So me personally, I am going to pass on that. Yeah, the 5 or the 1050 EMA crossover on, let me see here. On Nike does look pretty good. It has the 200-day moving average above it as resistance, but it is a good back tested approach. Let me see. 8.44. Okay. So, you know, in this particular setup here, you know, I would take the maximum that I would lose. Let's say the maximum I'm going to lose is $1,000. I would divide it by $1,000, the second ATR value. I would divide 844 into the 1,000. That would tell me how many shares to lose. That would be my maximum loss. So if I take the trade here today, my maximum loss is going to be 8.44 points below, roughly right around here. But that, again, that's my emergency stop. My initial stop would be if the price closed below both the 5 and the 20. I mean the 10 and the 50. You know what? I think I'm going to pass on this trade, actually. I think I'm going to pass on this trade. Second ATR channel's here. 200-day moving averages here. The 50 RSI and the weekly is right there, which would act as resistance. Doesn't mean it can't go up, but you know, I already do have Adobe. Of course, I had the overnight SPY trade. I already have Apple. So I actually feel pretty good with the positions I have. But anyway, if any of you take that trade, definitely good luck. Yeah, I I liked Facebook yesterday that it was coming back into the value zone, but it didn't mean that I wanted to buy it. I liked what it was doing. I liked that it was coming back into the value zone, but that's only part of what I needed to do. I needed it to move sideways and then trigger a V1 or a V2. So that's what I was looking for. He says, I can pass to Greg if you like. Sure. Kevin, stupid question, but what do you mean by V1 or V2? Oh, no, it's not a stupid question, Kevin. Let me, I have a lesson that I did on my YouTube channel all about V1s and V2s, what they are. I think the video is about an hour, but I'm going to post. There you go. I just put in the link to that, Kevin. A video. It's free, everything, right? Just watch it on YouTube, and it will describe exactly what V1s and V2s are. What trade is the room taking overnight? Well, I am taking the overnight SPY trade. I know that. I don't know if everyone's taking it, but I do. PC? I hope I'm pronouncing that right. Disney, sure. Well, you know, I like what Disney's doing. We are back in the value zone, but now that we're back in the value zone, I need to see it move sideways for a little while and then get a V1 or a V2 entry. You know, this is a V1 entry right here. Here's day one, day two washes out day one and then closes above day one's close. Or maybe that doesn't close, but close. That would be considered a V1. This would be considered a V1. Here's the low, wash out the low, close above. Right? Here's a V2. Here's day one. Day two washes it out but doesn't close above, but the next day closes above. That's a V2 there. So I'm waiting for a V1 or a V2. Okay. So it doesn't look like I'm taking anything here today, everyone. So just quick recap. One profit target on Adobe. Still using the 1050 EMA crossover. Apple, I have the long-term calls, so that's working out well there. And then the SPY, I'll be buying the SPY. But that's the only thing I'm going to take today. I really don't see anything that looks just great. I mean, the SPY and the QLD definitely have the setups, but just the way that I view trading, and sometimes it costs me and sometimes it saves me, but the 200-day moving average being up here at the second ATR channel, and on the weekly here, bumping up against that 50. But listen, it is a good back-tested approach on, let's take a look here. Yeah, so it does backtest positively, but not extremely positively. All right, so SPY got this SPY at 279.10. So that's the new overnight SPY entry trade. Boom, there we go. And let's put down Steve Burns for QLD and Nike. I imagine he got that somewhere right there. All right, and then Nike over here like so. All right, there we go. And I think I saw okay, so Frank's in on the Nike trade as well. Okay. Roger that. So we are in, so Steve's in QLD, Frank's in Nike, and Binky is still in TLT. Aaron 5950 is here. Good to see you, Aaron. Thank you for coming by. Peace. Greg, you're not worried about the unemployment numbers coming out in the morning with your SPY trade? Yeah, you know, with the SPY trade piece, I just take it every single day regardless. I don't want to have to, oh, maybe I'll take it this day, and oh, I won't take it this day. But no, it's just a trade that I take every single day. Johnny 26013, hi, do you do Forex trading? No, I do not. I don't trade futures. But whether you're trading futures or stocks or everything else, it's all about the same. Good risk to reward ratios, waiting for your trade, cutting your losses quickly, letting your winners run. But it's just, you know, the leverage with Forex trading is really high, and that's why I prefer not to. Oh, it's Joni, not Johnny. Joni. Appreciate you coming by, Joni. Hey, listen, if you have any other questions, please let me know. Real quick, just want to do my quick little daily plug, let everybody know that I do offer private one-on-one coaching, teaching lessons in the evening time via Skype. I love to teach. I've had a lot of great clients. I do have a course, 5 sessions. Each session's about 3 hours, so it's about a 15-hour course. It is $1,000, but I do think it is worth every penny. You know, there's a lot of interaction, a lot of personalized attention, and you know, I've been trading for 24 years full-time. I've had some great mentors and teachers during those years, like Stephen Burns and Dr. Alexander Elder and Larry Williams and Carrie Lavorne. And in this course, I teach you everything that I've learned from them, everything that I've learned on my own over the last 24 years. And it's a great course, and I think if you take it and when you're done with it, you are really going to be able to have a good grasp of how to trade, and regardless of what kind of market you have. And you know, it's one thing to read a book, it's one thing to take an online course, but you know, to have your teacher right there asking you lots of questions, you know, throwing curveballs at you, looking at tons of charts together, you know, I think it really helps. You know, I think one-on-one lessons are always the best, but the format is, you know, I'll teach you what I'll teach you during the first part of the lesson. The second part of the lesson, I basically have you teach it back to me. You know, I make you break down the charts. All right, what's going on here? Does this look good? Where's our next trade? Did we take a trade? If we took a trade, where's our profit target? Where's our stop loss? What's our position size? So, Anyway, if you're interested in taking the course, and like I said, I think it's worth every penny that it costs, and I think you'll be very happy with it. So if you're interested, please reach out to me either by email or on Twitter. Email's in the description. But before I take on a new student, I like to have a initial call with them just so that they can ask me questions about the course. I can ask them questions about their trading history and their challenges and their goals, and then we can just see if we're the right fit for each other. And it's the Skype call is totally free. There's no pressure from me, I promise you, at all. So you don't have to worry about that. So if you want to set up that Skype call with me, just email me. The description's in the video, and you can also just send me a message on Twitter as well. And then also, if you like today's podcast, if you're learning something, I would really appreciate it if you would hit the thumbs up button before you get out of here, before you click out. And also, hey, if you like it, it'd be great if you could share it on social media too. That would be great. Quad Racer, hey buddy, what's going on? Late for the party. Hope everyone's having a great afternoon. You too, Quad Racer. Actually, Quad Racer and I are having a Skype call tonight, so I'm looking forward to that, sir. Joni says, they call me both. Oh, gotcha. What is the best way to get into trading? Is Forex better for beginners, or should I get into swing trading? Well, my personal opinion would be swing trading. It would not be Forex trading. It's kind of an advanced form of trading. The numbers are a lot higher. In the description of this video, Joni, I have some links to different lessons that I have. They're free. They're on YouTube. I also have some really good book links down there, like Stephen Burns' Trading 101, Moving Averages 101, which is an excellent book to start off with. And I think if you watched my videos, read his book, you'd have a good start. Or you could take my lessons as well, right? That's another option. Johnny says, I'm still getting into trading. Well, good luck. It's quite an adventure. There's going to be some up times and down times, and yep. Jesse is here. Hey buddy, what's happening? Gosh, I haven't seen Jesse for a long time. Thank you so much, Jess, for coming back and saying hi. Jesse is a former student of mine. Jesse says, hi Greg and all. Hope everyone is staying safe. Thank you, sir. I appreciate it. I hope you're doing well with the family and work and all that. Great to see you, Jess. Okay. All right, so Adobe's what I have. Apple, Apple I do have on the calls, and then SPY, got the new overnight SPY trade today, and I'll sell it first thing tomorrow morning. As a matter of fact, I could put the order in right now, then I'm just done with it and I don't even have to worry about it. All right, so I'm just taking a look at Steve's trades here. So Steve did go long on Nike at 89.20. Let's say 89.20, yeah, 89.20. And on QLD at 109.38. All right, so we've got everybody's trades down. Good enough.
All right, so
By the way, in the chat there, who was it that just say they saw the interview with me on Famous Dave's? Shoot, now I can't find it. But in case you are interested in watching that interview, I will put it there in case you're interested. I just recently got Thinkorswim paper trading so I can get into trading. I've been wanting to try and start off with Forex trading because I feel like it would suit me. Okay, good enough. Just make sure, keep those losses small. Try to let those winners run. Create yourself a plan. Get out quickly. That's essentially what trading is, Johnny. Or Joni. All right, well, we had a good turnout today. That's fantastic. That's fantastic. All right. Well, listen, if you have any other questions, please let me know. I'm happy to answer. Otherwise, I'm going to get out of here. Beautiful day. Go for a walk with my dog Katie. Come back. I've got a call tonight with Quad Racer, so looking forward to meeting him. And then I also am teaching a student that I have in South Africa, so that is going to be a late night teaching session for me tonight. But I always look forward to those lessons. All right. Well, it looks like Brian says back to cleaning my room. Okay, sounds good, bud. Zach, Greg, thank you for your time. You are welcome. And hit the like button. That's right. Oh, I forgot to mention, please hit the like button and please go out and do something nice for somebody today. Just say hi, check in with them, give them a call, let them know you're thinking about them. It really might make their day. Just be pleasant, right? Just try to do that every day. John says, hey, Joanne, check out Michael Chin video. Fascinating trading spy. Interesting. All right. Well, listen, everybody, have a good rest of your day. And hopefully we'll see you back tomorrow during the last hour of the market. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.